What's up everybody, Tom here with another video. We've just hit and approached the community trend line tops on the stock market. We've also got a monthly R1 pivot that's just been reached as well. Has this market melted up a bit too quick and got a little bit too much FOMO in it? We'll be answering that in today's video. Stay tuned guys, this will be a good one. See you soon. Alright guys, well here begins our market recap for the markets closed 8th of November 2021. And in today's video, we'll be covering our thoughts on crypto markets right now, stock markets, and of course Tesla, Apple, and commodities. In terms of what happened over the last 24 hours, Tesla is the biggest story that most people are discussing. Elon Musk came out and said in a Twitter poll, you guys decide whether I sell a portion of my stock or not. Twitter decided yes. And what happens? The stock goes down. Is it a blip on the horizon? We'll be talking about that soon. Other big notables were that the FANG was fairly lackluster while semiconductors clearly performed outrageously well. And that's been multiple days now of semiconductor strength. Let's take a look at the indices. Russell 2000 was leading early, 1% up. This is our favorite index at the moment. We demonstrated that early last week with the big breakout that was occurring. And the Russell 2000, 0.47% up by the close of the day. Nasdaq down 0.12%. And in after hours trade, all indices have now slipped. And we'll be talking about that very, very soon because there could be a little bit more of a dip than some people expect. Maybe over this week. There are several reasons that we'll be demonstrating throughout today's video to really discuss that fact. Semiconductors here, 1.8%, XLB, 1.29%, and utilities, consumer discretionary, bringing up the rear. They were the weakest sectors for the market day of trade. As we mentioned, Elon Musk has decided he will sell 10% of his stake in Tesla. This is, of course, due to the Twitter poll that he put out there. And look, we can come up with a whole bunch of different reasons. I'll let you guys discuss what your reasons or thoughts are about Elon and why he's doing this. But realistically, if you sell 10% of your holdings and you're a major stockholder, that is going to rattle the market. Longer term, I don't think it's that big a concern. But shorter term, look, that's why it's down a bit. And some people are expecting upwards of 10% downs. I think that Tesla's done so much, it's due for a bit of consolidation here. Hopefully we get it consolidating or even pulling back slightly, because while you might not want that as a holder, we don't really want it going off into the stratosphere either, because as we know, that leads to the almighty blow off top, and then that creates a dead cat bounce, and then that creates many, many months of pretty weak action in the stock. And that's what we saw really in 2021 as a whole. In terms of earnings beat data, we always look at this from the fundamental perspective, 72% beat, so still above our magical 70% overall beats in the season. That proves in some ways that the fundamentals are really stacking up with the current technicals of the market. Beats 1,179 and misses 468. And I know a few of you in your comments say, Tom, this market, it doesn't stack up to any fundamentals. What the hell are you talking about? Look, we've got to go with what the market's currently seeing, yeah? So if the 70% plus beat rate is held, then realistically, it's still pricing in exactly where it's kind of being at right now in terms of trade. That's how I'm looking at it. I know the PE ratios don't make sense in many stocks, or even the PS ratios. PayPal here, we have after the close, that was a pretty good result that came out for that, or at least a result better than the current price action. You've seen a few other results coming through. We've got Palantir, which had some strong price action through the session. We did a live chart analysis of that in our stream just before. Subscribe if you want to follow our streams and come to the close sessions each day. And then we have Neo, Coinbase, some that people will be watching, and of course Disney a little bit later on the week, SoFi, and a few others. So they're still in earnings. Remember, there's still big stocks coming out, and this is partly why the market is staying so resilient. Remember, earnings is kind of like that whole big buy the rumor, buy into the concept, and then after all the funds had, after all the earnings are had, maybe sell a little bit off after the big funds come out of it, and then resume the trend as long as the earnings held up. And that's kind of the way I always approach the market. When you have other earnings periods and the market goes very, very strong, it generally leads in pretty well. Then it weakens a little bit after, kind of finds, I guess, a happy equilibrium, and then it kind of moves up after that. So it really is that buy the rumor, buy the fact to a degree, but then straight after that, facts come off and a lot of the shines come off, the market goes back to being technical. And that's why I actually enjoy when the earnings season is over. If you're a technical analyst, more than a fundamental, you actually kind of hate earnings season because earnings can create a lot of instability in your TA, whereas afterwards you can get a lot more clarity and you get a lot better trade positions. So let's talk about where we are in terms of the market, where we are in terms of just general retail sentiment and sentiment across the board. Well, of course, we're in extreme greed, and this is not new. A week ago, we were in extreme greed, reading 77 here, and a day before that, we were at 85. So we'll just keep ticking up here on the extreme greed ratings. And I think one of the biggest things that we're seeing here is that we're seeing an increased number of calls and less puts being put in the market. Now, for anyone that understands options, basically the more people that open calls, traditionally people think that is a bullish sign. I'm a bit counterintuitive across the board on that. I believe that if there's a lot of calls being opened, then really that probably shows a lot of FOMO and a lot of retail getting a little bit over leveraged. And of course, when we hit key technical levels, that's one of the signs we want to see because it shows us that Wall Street's ready to have a little bit of a dip, pull it back, make sure all of those calls expire worthless, ideally, because they're usually short dated. Remember, most retail traders trade about 1 to 2 weeks in options. Let's see. I want to know what our big brain traders in the comment section down below. Are you a 1 to 2 week options trader, or do you trade a few months worth of options expiration? I'm really interested to see that stat. But because most people trade very short dated, that's why these dips are often very short lived. They don't go for very long because they expire the options worthless and then move on to the next level. In terms of oscillators, we're well above the 80. So this is certainly one of those levels where if you take all of those readings together, you bring them into one, it's showing that we're getting into that extreme territory of a bit of FOMO, a bit of greed, and we might dip back around. Now, a lot of people say, oh, that means we're going to crash. Whoa, whoa, whoa. No, I don't think crash is happening right now. We're at a seasonally strong period of the market. The Season X shows that. And in general, markets very rarely crash. They correct or dip, but crashing is very, very hard to call. You're basically an extremely good person if you can always pick the crashes. And they usually happen once only, 7 years to 10 years. It takes a very, very long time, and an epic crash can take a lot longer than that. So let's talk about the VIX, the Volatility Index. We've been back at the level that we talked about. Anyone that's been buying VIXs at 15 has had a massive smiley face on their face for quite some time. They've been buying that 15 for a while, doing quite well. In many ways, it looks like a double bottom at this point. We break through this 50 exponential. We get past 18 on the VIX. At the same time, what I would expect is that the S&P 500 and Nasdaq are breaking down. They're doing something like this, which we'll talk about later, where we've got a peak, a trough, a lower peak, and a lower trough. That then spikes the algorithms in. The algorithms start trading. Everything becomes more fearful, and we get that short, sharp spike up in the VIX. Whatever we usually do with the VIX, it's generally short-lived. So what I mean by that is the VIX will spike. It might spike to a 20, a 24, a 26, even a 30. But it doesn't stay up there for long. So I think you've got to realize that if you're a VIX trader, you've got to be fast and you've got to be pretty damn nimble in the markets. Let's move over to some other really cool trades that have been happening in the recent weeks as well. And we didn't always cover gold and silver, but it's time to bring them back because we're starting to see some encouraging things into a seasonally strong period for both metals. We've got the left-hand side, we've got the head, and we've got the right-hand side shoulder here for silver. You'll notice there's a bullish hammer that's sitting around this right side shoulder. If anyone picked that up, especially the follow-through when it got back above those two moving averages, the 20 and the 50 exponential, congrats to you. Obviously, you're probably going to have a target around that 2480 area. And if it breaks through the 2480, I've detailed this a few times. If we have a head and shoulders pattern, what do? Well, we take the distance from the head to the neckline, we extrapolate that out, and guess what? It smashes straight into that 2820 zone. So this would be fantastic if we saw a closure above 2480. I think a lot of people will start discussing silver should that occur. And this is going to be one of those key critical zones that a lot of traders wait for in the markets, and a lot of swing traders and participation traders will get involved with that. A similar type of things happening on gold, and I've detailed this a few times now as well. We do expect, these end of November, December kind of pickups have been pretty legendary the last couple of years. The seasonals have been strong, and this is not good enough just to say, oh, I'm going to go trade the start of December and be successful, because we know these are just stats. But when we can bring together technical reasons, we bring together a solid kind of thesis or basis for that trade, that it can become a lot stronger in terms of the seasonal with the technicals. You know, you're bringing together a very good story. So we have a resistance here that we've had for, wow, I don't know, half a year. We've been sitting here waiting for this 1830 area. And these are some of the key zones. I just set alerts. If I'm not looking at the market, if I get the alert, cool. But it just means that if you set an alert for a key zone that you've been watching for a long time, then you won't forget about it. And this goes for some of your favorite stocks. How many of us have missed a stock before because we're looking at it 1 week and then we forget about it, or we've moved our attention to a different stock, and then all of a sudden we go back the next week, have a look at that stock, and we go, no, I missed the opportunity. Why am I so stupid? One of the ways that you cannot be stupid is setting alerts above those zones so that they come to your mobile or they come to your email address and you can check them out. Don't set too many, but set them for the key zones. So 1830, very, very good. 1832 pretty much here for gold for me. I'm going to see it most likely come up here, I think. Then it's going to consolidate ideally, and then if it breaches through, we'll certainly be bringing it into the daily roll for November into December, because I think that could be a big, strong participation phase should it break through. That's been coming for a long time here on gold. We'll talk about Tesla now, and Tesla comes back to the 4-hour 20. It went through our little 2-hour 20 because of the Elon Musk news, went straight down, then came straight back up into it, and because it was the previous support, dynamic support, it became dynamic resistance for the trade day, and then sold off a little bit off that zone. Look, I think here for somebody like a Tesla trader, they're already very, very happy with where it's gotten to. I do think that there could be a bit of a pullback here. Now, whether it comes back to the daily 20 now, or it kind of hovers around this zone and consolidates for a period, all of those types of ideas would be fine. It doesn't look like we've got a blow off top at this stage. And a blow off top generally is where it kind of drops huge and then instantly kind of bounces back up, usually dead cat bounces, does this, and then slowly grinds lower. And we have seen that on Tesla before when it's got very volatile, e.g. over here, it dropped heavily, came up, and then ground around for a while. So I kind of think that we could be in these types of scenarios. Ideally, we're not in this, and we don't want to be in where we've moved too far away, so then we start to decline for maybe a 6-month period. That would suck for a lot of Tesla traders. So at this stage, we're still cautiously optimistic. You look at things like the weekly, there are more, I guess, negative signs coming in after that initial move, but there's still very good supports. I mean, a lot of people are going to look at this zone and say, I'm waiting for that 900. I don't blame them, but I think any of these psychological zones, 1100, 1000, they're all going to be met by some type of demand from retail, and we'll watch how the structure forms over the next coming days and weeks. Apple's another one, paid the dividend, that's out of it now, and it's sitting right on that 150. I do kind of expect it to dip underneath this zone. So while we were talking about 150 for so long, the problem was that it's done 150 before the earnings, then it's dumped down, then it's gone back, and what's happened at the same time? We've hit a resistance on our Nasdaq trade. The Nasdaq has gone so much further than Apple that I think Apple could actually flow back down to 145, 146 in the dip, and then resume the trend. And I still have high expectations of Apple up to that 165, 162, but that's just more based on where I think it could go value-wise. At this stage, above 150, still key, and as long as the market holds, you'd expect it to run off, but I do think the Nasdaq's starting to show some weakness, and we'll talk about that soon. IWM, very powerful looking index here still. I would not mind at all for this now to dip down, touch the daily 20 moving average, where the resistance becomes support. What a fantastic role reversal that would be, and then continue in its seasonal up. And for any new viewers, what we're talking about in terms of seasonals is an 80% strike rate through November. So you can see October is generally very positive for IWM, the Russell 2000. November, very, very positive from a stats side, and even December, incredibly positive. So when we have a breakout, when we have these types of things occurring at the same point, that's when we start to get a little bit more bullish on a pair like this, and we certainly have been bullish now for a week. It's paying dividends, and if it does end up coming back down, there's always that full-on channel. Remember, the distance here that it was in for a whole year is A, that section equals B, and it basically puts us into a 260 number, which is probably outperforming a lot of the other markets. Let's move over to the S&P 500, one that everyone's watching. Our community trend line has been reached, and we have seen some indecision around this point. Long leg doji here, a little bit of indecision through the Friday trade. Monday was just boring. Like, it was flat. It was just doing absolutely nothing. And I think what's happening now is we're getting into this point where we might see a peak. We've seen kind of a trough. We've seen a potential lower peak form through the Monday session. Now what do? Do we get underneath this 46.75 zone? Do we now push towards maybe coming back to the daily 20 or even the daily 50? And there are some options that we could use to figure out key levels. And there are a few other discussions that we could have. So the first one is going to be the daily 20. This is the most common pullback zone for the S&P 500. And you could almost make an argument recently, it's actually gone through the daily 20 quite a few times and gone to the 50. Now, if it comes to the 50, which is this blue line here, these are the two scenarios, 4,600 or even a 4,500. And the only reason this will happen is because it's gone up so damn quick that Wall Street loves to have those little dips and then rally into the back of November, rally into Christmas. It's very common to see these. If you've traded the markets for enough years, you'll notice that when you have these September, October kind of falters in the market, they often come out very strong and have those second little dips, the little dip to get all of Wall Street's money back in. They go on massive rallies, get everyone excited, get everyone in options, and then pull back into the next area. So the 50 and the 20 are both areas that we're going to watch very, very closely. And specifically this 50, if it did come back down to here, if you notice the 19th, I believe, of November, there's a whole bunch of expiries around here for puts, and it's massive. The amount of puts that are there is huge. So I do not expect it underneath this under any circumstances come the 19th. That would already be a considerable pullback. Let's just measure these. So we're talking about either a very thin pullback of 2.69% or a kind of bigger pullback of around 4.44, 4.5%. Do I expect more than that? Not at this stage from a technical perspective. It seems very unlikely. We've got very strong technicals here, and investors will be looking at this saying, oh, well, whatever, a little bit of dip, more chance for my opportunity. And I don't blame them, because really all that would happen if it got to the 50 is it'd basically just be hitting the 20 weekly again, and then it'd be bouncing back off ideally from that point. So investors probably aren't too concerned, but traders are looking for these opportunities. The Nasdaq is also reading the same kind of signals. If we look here, we've got our ascending channel. It's hard to ignore when you hit the top of that ascending channel, and we are there right now. We've got signs on the Seasnax. Again, we've got the monthly R1 on the S&P. We've got the S&P 500 hitting the trend line as well. Could we be seeing weakness down to the 20 or even 50? You'll notice I highlighted the 50 down here, and I like both zones quite a lot. So we'll keep watching it, but this is right where you expect that weakness to start to form, or at least some bigger traders to maybe take some profit into that mid-November weakness. We'll move over to the crypto markets now, and I tell you what, Bitcoin just keeps on going up, and I'm not sad about it. I love Bitcoin. I think the Bitcoin and the crypto markets are set for a pretty good back end of the year. However, it's happening a little bit faster than even I expected. I thought we'd have a bit of a Bitcoin pullback. So let's look at this ETH-BTC ratio. It's 0.071. If we actually look at where we expect it to go to, it's about 0.08. So could Ethereum be just getting ready for another move now that Bitcoin's at about 67.5? Might see it go down and then boom back up. We've talked about Ethereum to 5,000 now for quite a few weeks, and it's certainly looking very, very close. Let's move over to BTC. So BTC mega close here on the daily, all-time highs. Congratulations to the crypto people right now. They'd be very, very happy. Smashed through this resistance we had at 63,665. A few people mentioned this in the private hangout I did pre-market. They said, Tom, I think it's coiling, it's ready to go. And it blew through that zone. And then, of course, any day traders that were involved in that blowout have done very, very well. And there could be a lot more here for Bitcoin. I was looking for the ABC ideally. So what that means is that if you're looking for reload, this distance is the same as this distance. So usually you get very similar pullback sizes. So you get your A, your B, and your C pull. And that C pull was going to push us just under 80,000. If we take the same distance, let's just say, okay, well, the pullback is shallower because, you know, this hype, FOMO, everyone's feeling great. Let's take this out. So it's actually pushing an 80 to 82,000 over the next move. What do you guys think? Where is Bitcoin going over the next, let's get it to the end of the year. I want to hear your expert opinions on what you think it's going to. If I'm going to go with a random guess, I'm going to go with 100K or just underneath 100K. Now that might sound insane, but I actually think it's possible with the kinds of, systems and things that we're seeing. Now, it's not an endorsement to do anything with that. Obviously, it's just my personal opinion. But yeah, it could go to 100. I'm not calling 500, 400, but this is a level that I've always believed ever since we got through that 40 earlier in 2021. It became very likely that we could have these booms into pretty unbelievable numbers, similar to the 17 run. For people that are watching the news this week, you've got to, of course, mind out for Tuesday, PPI, 8:30 a.m. ET time. That's, of course, New York time. Then we've got CPI, core CPI coming out for the market Wednesday, the 10th. And then it keeps coming with news into the weekend. We've obviously got a bunch of bank holidays here. Thursday, bank holiday. Please be aware of that. So bank holiday here for Thursday, November the 11th. And then we've got the Treasury Currency Report. We go on to the next week. So we're still in earnings. We're still seeing some pretty interesting numbers coming out of the US. And it's all mumbo jumbo in terms of inflation or not inflation. It's very, very difficult to figure out exactly what's going on there. So we just follow the price action at this stage. Thanks so much. If you enjoyed the video, please remember to subscribe, smash that like button, guys, and we'll see you in the next one. Bye for now.